Got it. So in regards to this, before go up to the top and click new backtest. Now click SPX dailies. Under dates. It's right by COVID crash.
Yep, I clicked it.
SPX dailies. Your computer may be lagging.
I clicked it and changed the date.
Perfect. Okay, yeah. So you see how that changed to 5/16/2022?
Yeah.
So that means before that, we only had 3 days of expirations per week. So that means we were only able to create like basically half as many occurrences.
All right.
That make sense?
Yeah.
Okay, now click back on the regular backtest. You can
just cancel this.
Yeah, just cancel. So when we scroll back down to those annual metrics, so we would anticipate that the max drawdown or return is just going to be much more volatile in 2020, 2021.
Until it hits 2022.
Yeah, because the amount of days that we were able to sell, like we weren't able to flip the coin as much. And also, if like Monday was a bad day to trade, but Tuesday was a good day to trade, we didn't get to trade Tuesday. So the thing is with 2020 and 2021, I don't want to see a trade that does not work. That's not okay. But you can see that the returns don't look very good in 2020 or 2021. That's fine because they're still positive.
Yeah.
You know, and also if you remember what happened in 2020, the world went down. So I would expect a put when the volatility index goes from 13 to 80 would not perform very well.
Yeah.
You know, so we're like, we're fine with this. But if those were negative in 2020 and 2021, we wouldn't touch it.
So these were negative returns?
Well, yeah, if there's no green.
If there was no green, it was just red. So that's how
So yeah, they had big drawdowns. Yeah, they had big drawdowns, but that's kind of just a function of we couldn't flip the coin as much.
Yep, makes sense. And so when you go to the dailies, it'll kind of automatically tell you where this started becoming a pretty good return.
Smooth out the return a little bit. And the other thing we want to pay attention to is 2024. Because in 2024, the volatility index, which is the VIX, the thing that's shown on that 0DT chart, is really low. So there were a lot of trades that worked well when the volatility was high and now no longer work. So this looks good across the board. Okay.
Awesome. Yeah.
Now the next thing here is you can see that the drawdown is relatively large. And even though this pays really well, the MAR, the max risk ratio right there, is not super high, like our risk to reward. This is basically twice as good of a trade as the S&P.
All right.
So what do we know about the standard deviation range? If we're losing on a put, the market can only be in one place at one time, correct?
Yeah.
So if we added a call to this, it could potentially increase our return because it doesn't use any more buying power. It could lower our drawdown and it could raise our max average risk ratio. You know what I'm saying?
All right.
So now the question is like, okay, let's add a call to this and see how it goes. So click new backtest. And then go add leg.
Where's that?
It's right below the buy put.
Oh, yeah. Add leg.
Okay, now you're going to sell a call and to buy a call that matches the exact same, I call them mechanics of the put.
So it's the so obviously not a delta, it's a dollar, it's a premium.
Yeah. Fixed premium, $1. So actually X out that buy call. Cancel it, the buy call, and then click the chain link on the sell call. And then undo the lock. Yeah, undo the lock. That little green lock on the right. Okay, perfect. Now just copy the put side.
So $1.
And then with calls, remember it's above the price, so you don't put a minus in front of it. Okay. Now scroll down. Keep scrolling down. We're still going to do one lot, so it doesn't use any more buying power. It's still going to be at the same time. It's still going to be the same VIX index. Scroll down. And then here to click use leg groups. So even though we're entering this as a condor, under leg groups, scroll up.
Use leg groups.
Yeah, use leg groups. Okay, now title 1 put and title 1 call. So
group name 1 put.
Yeah, just you don't have to put 1 put, but just say put. And then group name call. and then click the little golden down thing for the calls to be under the calls. So basically what we've done here is this is a condor, but we're managing each side separately. So we don't want to like lose on the call. We don't want to waste money on slippage buying back the call side, like when it's basically going to be worth nothing. You know what I'm saying?
Is this what the guy's talking about in the academy? When he's talking about portfolio management, when you can manage a condor, you manage.
So we're trading a condor, but we're choosing if we want to manage it as a condor or we just want to manage each spread individually. So in this instance, we're going to manage the put spread and the call spread. But since it's free buying power, we're just going to trade it as a condor. You know what I'm saying? Because we want to see if by adding the call, it improves our 19 grand, 7.6, 1.4 basically. Now scroll down. So on the stop loss on the put, we're still going to be 700%. That's all fine. Scroll down to the call then. On the call, put 500. Stop loss. Now use intermittent stops. Right, use 0 DT intermittent stops because we're trading.
There it is.
And then do NBB minus trades. Minus only.
Yeah, minus only. Yep.
Okay, now scroll down. Everything else looks good. Same commission. We're capped. Get rid of use. Yeah, it's fine. Use min max fine. Now run it. Now we'll wait a little bit. So a thing to remember, I'll usually write it down on a piece of paper, is so 19 grand. If we make more money than 19 grand and we have less of a drawdown than 5.2, it makes sense to sell the call. You know what I'm saying?
Yeah.
Oh, what went wrong here? You do not have sufficient to execute the trade. 100 max 1 contracts. Sell call, buy call, sell put, buy put, move. Exact click on new backtest. Scroll down. It's got to be a buying power thing. Just add a 0 to the 50 and see what happens. So it'll just be 50 grand, 500 grand. And that should do it. Now click run. I think it's still not going to work. Yeah. Just hit the back button and let's retry this.
Right here.
Yeah, and then it'll take you to the original back test again. Okay, now try this again. New back test. Now add leg. Or chain it. You're going to chain it to the call.
Oh, yeah.
Unclip it.
Yep, and then sell call, buy call, and then right here, fixed premium, $1 and 100, and then starting funds, good there.
932. Use leg groups.
Where's it? Oh, yep, use leg groups, and then this one, put. Call, bam, bam, and then stop loss
700. That's fine.
And then stop loss 500.
Yeah, and then make sure you click 0 day.
0 day intermittent, and then bam.
And then commission and fees are all good. That's all good. Slippage is all good. Okay, run this again. Actually, oh, you know what? Get rid of use min max premium. That's what fucked it up. Just cancel. You'll probably have to reinst. Okay, there you go. Now run it. So the reason that happened is you put $1. So you're telling options Omega, pick the one close to $1. And basically it chooses too many that are like $1.25.
Makes sense.
That's what fucked it up. Okay, so now like I usually get a piece of paper and write it down. 19K,
19,000,
6, 1.4. And you'll also see here, I guarantee you the win rate's going to go down, but we'll make more money. So this is kind of like the time velocity of money concept, whereas the faster we turn the money over, meaning we're collecting twice the premium, it makes sense to trade it. You know what I'm saying? So we can sell
you're
more
saying,
premium.
the better test of this would be due to the condor, but manage the condor separately.
So see this? So like our capture went down, our win rate went down, but we made
but only went down 2%, and we made freaking $13,000 extra. So
yeah. So maybe save this one and call it Connor practice condor or something. You know what I'm saying?
Yeah.
Create new backtest.
Oh, create new backtest.
And then you'll save this under Connor LTR.
Dude. So can I ask you one thing? This is kind of a rookie question, but so this is the ending capital after the year, correct?
Well, it's a 4-year long backtest. So this is after 4 years.
4 years. All right.
Makes sense. We would probably not continue to trade a one lot after it was winning for so long. You know what I'm saying? We just used a one lot because it gives us a better assumption of what we should expect.
All right.
Okay, so now this is where I think this will confuse you in Trade Steward. So now let's go to Trade Steward and think if you wanted to program this trade, what would you do?
Yeah, this is gonna be a good one. All right, so let me go in here. And is there any way I can like just completely refresh this to where I don't have to go in here and redo all the legs and stuff, or no?
Yeah, you can just go create new bot, but it's always gonna copy all the legs. Like if you go, if you go create new, and then Connor never turn on.
And everything's
put it in your strategy. Yeah, your Connor never turn on.
Yep.
Okay, so now if you wanted to program this trade, how would you trade it? How would you program it?
All right. You just want me to go step by step, is what you're trying to say?
Yeah, you're gonna screw up, but
I'm gonna screw up.
I'd be surprised if you figured it out. You have to think critically. It's a trick question.
I'm gonna go SPX.
Yep.
And then I'm gonna go Condor. 4 legs. All this crap doesn't really matter, right?
Nope. You're wrong. So if you think about it, we're trading a Condor because it gives us buying power relief, but we're managing each side separately. So
we're trading a vertical spread.
Correct. So it's still fine to call it $1 Condor put side, $1 Condor call side. However, how we want the bot to manage it, if you go back to the back test,
is 2.
If you look at exit, you see the exit. See how they're split. So this option on Options Omega basically just created 2 trades and 1 back test.
That's sick. All right.
So this is like, we had 1 trade. Now we have 2 trades in 1 trade, and then this will eventually go into portfolio. So if we're making like leapfrogs, this is like step 1 to making a portfolio.
Yeah. All right, but we're managing them separately into portfolio, correct?
Correct. The only reason it's a Condor is because we have free buying power. And the reason we ran it in the back test is because we don't want to like export this to Excel and then input a formula to figure out how they matched every day. The software just does that for us.
Makes sense, man. All right.
Dude, it's just like SDR. And like think about the put and the call or like an outreach email. And like for however many outreach emails you send, you should be able to get X demos booked.
Yeah. That makes sense, man.
Yeah.
So that helps me out a lot to understand. Yeah. So you put it in as a Condor you said to increase.
So this is 2 different trades. This is not putting it as a Condor. Options Omega is just able to test 2 separate trades as a Condor. So it just gives us the math information quickly.
All right. So don't even think about this as a Condor. 2 separate trades. You're going to manage them as 2 separate trades, and you're entering them as 2 separate trades.
Correct.
Awesome.
Whereas if you go to new backtest to help you show the other way, click new backtest. Now just click Iron Condor strategy. Select strategy. You just click Iron Condor. Yeah. And then just run it. Just click run. And just go year to date. Actually, it'll go quicker. If you've already clicked run, it's no big deal.
Let me see.
YTD is right under dates. It'll just do the back test quicker. So we're not going to save this. I'm just trying to display it quickly. But you can see here that when the condor populates in the back test, it'll show it as a condor. So see how in this one, it just has the exit on 1?
Yep. And so, dude, we got freaking screwed on this one.
Yeah, but you could see how this trade is, not as good as managing each side or whatever. And also the thing I see with people is like, if we're managing a 4-leg trade, the slippage is going to be higher than if we manage a 2-leg trade. So this is kind of like a money hack on like, oh, we can make more money by losing less money to slippage. Whereas like in a lot of people that are unexperienced in backtests, they'll use the exact same slippage, which is not going to happen in real life. It's like the fruit roll up Rice Krispie treat example we talked about.
Yeah.
So now you can just go back. We're not going to save this.
We go back.
But now if you see this trade, like this is 2 vertical spreads. It's not a condor. This software just allows us to trade 2 vertical spreads in one test.
That makes sense. All right.
So now if you were to program this,
we're going to go vertical spread, number of legs but 4, right? Then everything else.
No, why would we have 4 legs in a vertical spread?
So it'd be 2.
Yes, but you're not understanding it. So I'm asking, like, you know what I'm saying? Like, why would we have 4 legs in a vertical spread?
Because we're managing 2 different ones on here, right?
But you're inputting them as separate vertical spreads. So like if you have 4 legs, how would that be a vertical spread? You sell a put, buy a put. Where are your other 2 legs?
It would be sell a call, buy a call.
Correct. But we're not trading a condor, we're trading a vertical spread.
All right.
So and also to reiterate this, go to trade type.
Where's trade type at?
Right there, where it says vertical spread. So click single or click vertical spread. And okay, well, usually it will auto populate to 2 legs. So actually,
it usually does. But I chose 4.
So okay, now click condor and see if it automatically populates to 4 legs.
Yeah.
Okay, so that's like, Trade Steward is smart enough to know to not give you 4 legs. But this is an important factor. Like, I was trying to do this to confuse you, so let's not move on until we get this. Like, does that make sense? That even though our back test had 4 legs, we were just using 2 different back tests, 2 different trades in one back test.
Yeah, that makes sense. Yeah, and it would make sense that you're going to go manage them in that portfolio list too, even though, because what helps me make sense is they're in order. One's a put and one's a call. That helped me. Like, we group named them, so that means they're 2 different tests.
And it shows it on the back test. Whereas when we did the back test of the condor, it showed it as a condor.
Yes. All right. I see what you're saying.
So this could be confusing. You know what I'm saying?
Yeah, it is confusing.
That was the point. Yeah.
So on the trade type, what do I trade then? Is it a vertical spread or is it a custom then?
It's 2 vertical spreads.
All right. How do I make it to where it's 2? Do I just do 4 legs or no?
You'll just have to create a new trade. So you would just title this one like 932 condor put side, and then it would be 932 condor call side. You know what I'm saying?
All right. That makes sense.
Or you could just call it 932 vertical call spread, 932 vertical put spread. It's whatever you want to call it. Again, I'm further along, so I'll call it a condor. But you could call it anything you want, whatever helps you remember it.
Best practice is call it a vertical spread 1, vertical spread 2, or like put call or put side.
So the way to think of it is like we're trading a condor, but we're managing each one as a separate trade.
Yeah.
Because a condor is made of what? 2 vertical spreads, except we're just managing them separately. So we are trading a condor. We're just treating each one individually.
Makes sense. So only way you can be able to manage it if you create 2 different ones in Trade Steward as well.
But the reason this is benefit to us, because again, when we did the back test, we make twice as much money for the same amount of capital.
Exactly. That makes sense. We made 13,000 extra.
Yeah, I want to make an extra 13 grand, Connor.
So. Yeah, I want to. I think. Yeah. So this one will just run as the put side. So we're gonna put put a short, and then let me see. So target $1 and max width. It's going to be a negative 100, and then size ratio 1, exact 0, and then hey, on this.
So you don't need to put that.
I didn't need to put that. All right.
Yeah. And then see how it also says on the spread leg. So like the spread leg is the one that you buy, because the vertical width between the short and the long.
Yeah.
So that one's always going to be blank, never going to be filled in because we're selling.
Makes sense.
And vertical width is 100. Yep. Size ratio 1. Days to expiration 0. Scroll down. How many lots are we trading? The quantity?
1.
Yep.
And then what were the days on this one?
Time. Yeah. It is every day, daily.
Daily 9:32. 9:32, and then all.
And then what's your end time? You got to define it. Usually just have like 5 minutes, because
5 minutes. Yep.
Yeah.
Remember you saying that yesterday. 37. Where'd you go? There you are.
And then I like the no position, because that's just a redundancy to make sure our bot doesn't go haywire and trade our entire account. And then entry speed, since we're trading 0 day, we're always turbo.
Turbo. Awesome.
Yeah, like it's 0 days fast. Trade exit. We don't have any. We don't have a profit target. We have a stop. So what type of stop are we using?
We're using a what was it? It was a
You got to look back.
Stop loss 700%, so it's a percent stop, percent loss, right?
Mm-hmm.
And then that's gonna be, so I can't remember yesterday, did we do this as a negative, or you just do 700?
It's just regular 700, and then you're going to use broker resting.
Broker resting.
That means it's just at the broker. You could read that, but we're not going to mess you with bot algo yet. And then you're going to do short only, because we're only going to manage short leg. The 100 wide is, it's dead to us, the long leg.
Yep.
And then stop leg only. Stop based on stop leg only. And then there's an entry filter on this, right?
Yeah, there's the stop loss, intra-minute stop loss.
What's the entry filter?
Yeah. Is it the VIX on move down?
So program that in. Remember, these are tricky because there's max, min, and then go either way. So
yep. So it's the min down 0.25. So down. Where's the down? The down is.
Why do you think it's minimum price to enter? What does price have to do with anything?
Oh, hold on. My bad.
So it's going to be under the entry filters.
Where's entry filters? All right.
And then turn off the minimum price to enter.
Let me read what this says. VIX move down. So one day, is it the